All right, folks, let's dive into the world of spot Ether ETFs. And it's pretty exciting how these instruments are reshaping crypto investing.
Yeah, exactly. Absolutely. Spot Ether ETFs are these investment funds that actually hold physical Ether tokens. So they mimic the exact market price of Ether, right?
Yep, that's right. Essentially, investors get to buy shares that track Ether's current value and, well, they trade on traditional stock exchanges like the NYSE or NASDAQ.
So it's like instead of setting up a digital wallet, you're just buying an ETF like you'd buy any regular stock. Am I correct?
Exactly. It's super convenient because it removes all the technical headache of managing direct holdings on a crypto exchange. It's like turning what could be a daunting process into something that feels as familiar as traditional investments.
Yep, exactly. And do we know who the major players backing these ETFs are?
For sure. The SEC gave the green light for filings from big names like BlackRock, VanEck, Fidelity, and Grayscale, among others. This means some heavy institutional backing is coming into play, which could really
Yeah,
change the
I get
dynamics
that.
for Ethereum.
Right, but isn't that a bit of a double-edged sword? I mean, while institutional money can drive growth, it also might increase centralization concerns for Ethereum's decentralized ecosystem.
That's a fair point. With large scale investments, there's always the risk of um, concentration of ownership, and that could push Ethereum more towards centralization. But on the flip side, this could also lead to more regulatory clarity and mainstream
I
adoption.
see. Speaking of regulation, the SEC's role here is fascinating. Their approval of spot Ether ETFs, following the spot Bitcoin ETF's approval earlier this year, is kind of a landmark move, isn't it?
Absolutely. It not only legitimizes crypto in the eyes of traditional investors, but also suggests we're getting a more structured and, yeah, regulatory environment for digital assets. It's almost like bridging the old financial system with the new crypto realm.
And how do these ETFs actually operate on a day to day basis?
Well, think of it this way. The ETF issuer actually buys physical Ether and holds it as an underlying asset. Then they list the ETF on an exchange, so investors can trade these shares throughout the day, just like any stock. This process ensures that the ETF's market price stays aligned with the net asset value of the underlying Ether holdings.
Right, makes sense. That liquidity factor is pretty cool, isn't it? You can literally enter or exit positions without fuss, which is a major step up for casual investors.
Exactly, it's a game changer for accessibility. And the liquidity really opens the door for, well, even those who are wary of the complexities of crypto exchanges to get a slice of the action.
Yeah, that definitely lowers the barrier. Now let's talk about the alternatives. What's the big difference between spot Ether ETFs and Ether futures ETFs?
Good question. So, spot Ether ETFs hold the actual physical Ether at current prices. Ether futures ETFs, on the other hand, invest in futures contracts, essentially agreements to buy or sell Ether at a set price in the future.
So it sounds like the future ETFs are a bit more speculative then, right?
Exactly. Futures ETFs can give investors exposure to Ether's price movements without direct holdings, but they involve different risk profiles and more complexities like contracts and potential rollover issues.
Got it. And how does direct investment in Ether compare to these ETF approaches?
Direct investment means buying and holding the Ether outright with all the market volatility that comes along. Spot Ether ETFs, however, offer exposure to Ether's price without the hassle of managing wallets or the security concerns tied to direct crypto holdings. Then again, futures ETFs provide that indirect exposure through contracts. It really depends on what risk profile or convenience level you're after.
Right, that balances things out. With benefits like diversification, liquidity, and easier access, it sounds like spot Ether ETFs might really attract new kinds of investors.
Yep, exactly. Investors can diversify their portfolios with a regulated, well understood instrument that still gives them exposure to Ethereum's growth potential. It's like having your cake and eating it too, without worrying about making a mess.
Haha, true that. But of course, no investment comes without risks. What are some of the main risks associated with spot Ether ETFs?
Well, you've got the usual suspects. High volatility is a big one. The price of Ether can be extremely unpredictable, and that volatility directly affects ETF share value. Then there's tracking error. Since ETFs aim to mirror the underlying asset's price, any operational expenses or market inefficiencies might cause slight discrepancies.
That's true. And don't forget about the regulatory risks. With the crypto landscape evolving so quickly, new rules could pop up that might affect these ETFs or even how Ether is classified.
Right on. Plus, there's counterparty risk. Investors are, in a way, trusting the ETF providers to securely manage and hold the physical Ether, and any operational hiccups on their end can be
absolutely.
quite detrimental.
You mentioned earlier the possibility of increased centralization due to large institutional holdings. How significant do you think that risk is, and might it undermine Ethereum's decentralized ideals?
Well, that's a point I was pondering. On one hand, institutional investment brings credibility and much-needed liquidity. On the other, it risks tipping the scales towards centralization. I mean, it's like having a few big players dominating the market, which could compromise the decentralized nature that the crypto world treasures.
I see your point, but isn't it also true that increased institutional participation could drive better regulatory oversight?
You're right, it's definitely a balancing act. On the plus side, with regulatory scrutiny, you get more security and transparency. Yet, as you mentioned, the risk is that regulations could become too tight, affecting market freedom.
Yeah, it's a double-edged sword. Moving into the future, how do you see spot Ether ETFs impacting the broader crypto ecosystem?
Oh, it's huge. With these ETFs, we could see billions in new capital flow into Ethereum, driving innovation and economic growth in the crypto space. More projects, improved protocols, attracting even more developers, that sort of cycle. It could really cement
exciting times.
Ethereum's position as a leading smart contract platform.
And probably this might even encourage diversification in crypto portfolios, right? Investors might look at altcoins in addition to Ether and Bitcoin.
Precisely. With ETFs bringing in mainstream investors, portfolios could be better balanced, reducing overall market volatility while increasing liquidity. It's a win-win for the ecosystem in many ways.
That does sound promising. But with all this potential, when do you think these spot Ether ETFs will actually hit the market?
Well, according to the filings and approvals, investors could see them by the latter part of 2024. However, there's still quite a bit of regulatory fine print to be ironed out. Think hundreds of pages of documentation. It might take a few months before they're fully rolled out.
Yeah, regulatory processes can be quite a slog. And once they're up, most online brokers that already offer Bitcoin ETFs or Ether futures ETFs will likely add these, right?
Exactly. It's a natural progression as the market demands simpler, more accessible ways to trade digital assets. Trading spot Ether ETFs would be as straightforward as trading any other ETF, which makes them very appealing for a wide range of investors.
That efficiency is key. To wrap things up, do you think the benefits outweigh the risks for the average investor considering spot Ether ETFs?
I'd say so, especially for those who crave exposure to crypto without the intense risks of direct investment. Sure, volatility and regulatory uncertainties exist, but the benefits, diversification, liquidity, and ease of access, not to mention the regulatory oversight, create a compelling case. It's like a safer gateway into the crypto market for many investors.
Yep, that sounds like a balanced take. Well, this conversation definitely sheds some light on the dynamics at play with these new instruments.
Absolutely, it's an exciting chapter in the evolution of crypto investing, and we'll be watching closely as it unfolds.